Hello and welcome to an all-new episode of the Transfix Take podcast, where each week we deliver news, insights, and trends for shippers and carriers. It's the week of March 13th. I'm Jenny Ruiz, and I'm joined, of course, by our market expert, Justin Mays. Mays, how's it going this week?
It's going great, Jenny. I can't believe we're already in the back half of March and on our way rolling out of, Q1.
Yeah, the time changed this weekend, and all of a sudden we're in mid-March. I don't know what happened. We were just talking about predictions, I feel like last week, but such is life. I wanted to bring up the West Coast is still recovering from inclement weather conditions, obviously, over the last 2 weeks probably. And this week's top 5 worst weather lanes is powered by WeatherOptics. And here's where we land. So top 5 includes Sacramento to Seattle with the highest driver risk. Then we have Salt Lake City to Denver, Denver to Chicago, Seattle to Spokane with the highest shipment delay percentage, and then Las Vegas to Salt Lake City. And as I'm saying to, it's really to and from out of these and into these regions. But Mays, any particular call outs to note, knowing that these have the highest impact for the week ahead?
I mean, you hit it right on the head. It really has to do with the weather. I mean, they got a ton of snow. Hard for me to believe because it's 70 degrees here in Atlanta, but they got a ton of snow. It's going to continue to have some impacts, especially to delays and the driving atmosphere. But I mean, we'll get into it shortly. But like the West Coast itself, it is starting to trend upward for carriers. Now, does the weather have some to play with that? Yes, but also seasonality.
Seasonality is going to be a big topic of discussion, I feel like, over the next probably month and even beyond that as we get closer and closer into the beginning of produce season. But that said, it's time for the regional breakdown. Now, we're seeing an overall increase in the market over the past 7 days. And we've been talking a lot about seasonality, of course, and the start of produce season starting to wake up a lot of markets across the country. But Mays, what can you tell us about this week's national average rate per mile and tender rejection rate?
Well, Jenny, to jump into it, it's the first time that we're actually seeing a trend of upward pressure in rates since January. So it's good news for carriers. Like you've mentioned, it heavily has to do with seasonality. The last time we spoke, the average rate per mile line haul was about $1.58. It's gone up about 4 cents to $1.62. It's starting to flatline, which we're going to experience some bumps on an upward pressure, really driven by seasonality down in the southern region of the U.S. Again, driven by produce season, as you mentioned. On the flip side, tender rejections are still going downward, but they are slowing. I would believe that tender rejections are still going downward because rates are still ultimately low, and there's a lot of new contracts that rolled out. Carriers and brokers need to accept that freight. But I don't think we're going to continue to see this downward trend of tender rejections just because we're seeing the opposite direction for rates right now.
Okay, well, that's great news for carriers. We've been talking a lot about decreases over the past, I want to say, probably longer than 90 days, and we won't get into the specifics, but we will get into the specifics of the southern region. So we're starting to see an increase here in the border markets, thanks to that import increase that we saw last week. But what are we looking at this week?
Well, Jenny, it's not just the border markets anymore in the South, which is good news again for carriers. The larger volume markets such as Dallas, Fort Worth, Houston are also experiencing that upward momentum in rates caused by greater volumes down south. I mean, as you mentioned multiple times now, it's produce season. Avocados, everyone loves them. They got to get moving from somewhere. That is generally the main produce coming from the state of Texas. And we're not going to see this change, going into next week. We're going to see the South continue to tighten up. We're starting to see it spread, more west, more east from that southern region. Now, it's not going to be significant momentum like we saw in downward rates, but don't expect rates to go down in the South region. If anything, they're going to slowly start climbing up.
Okay, maybe some more good news, but we're moving over to the West Coast. Now, I see some markets are starting to pick up, like Los Angeles, Las Vegas, Ontario, and Phoenix, which are some of the larger markets. Is this region starting to become more attractive to drivers now? What's going on here?
It's definitely becoming a little more attractive, though it still has ways to go. Rates are going up, but they're still very low relative to where they were, 120 or more days ago. But you make a great call out. The higher volume markets are increasing, which really shows it's going to be more of a domino effect as capacity starts moving around to go after a higher rate per mile. The state of Arizona and New Mexico are starting to see real tightness tick up because of, again, produce season. But somewhere to keep an eye on is definitely going to be Southern California, the Ontario and Los Angeles market. These are, the highest volume markets, top 5 in the country. If they start continuing the trend upward, that's definitely going to impact the entire West Coast. I don't think we're going to see it continue to increase at the speed we see in the South. But we're not going to be seeing the rates in the West Coast continue its downward trend that we experienced, like you said, the last 3 months. I think that we hit our bottom in the West Coast, and there's really only room to go up, but it's going to be a slow ride up.
Okay, now the Midwest seems to be taking the reins for what seems to be the least desirable region now, with just about every single lane, minus Evansville, Indiana, taking a dip, even though we're seeing a consistent supply of capacity the past couple of weeks with freezing temperatures. What should we expect this week?
We're going to continue to see the Midwest slide downward. To be honest, I think we saw a larger decline over the past week than I would have originally anticipated. I thought it was going to start slowing down a little bit sooner. But at the end of the day, the freight coming out of the Midwest is going to be very desirable heading south into the West to get those higher rates, even the Southeast. That's going to drive rates out of the Midwest down farther. So I think over the next week or two, we're going to continue to see that downward pressure. I do think it's going to start slowing down as we roll out Q1, but it's going to be something to keep an eye on. Like you said, temperatures, definitely something to keep an eye on, but we are hopefully coming to the end of cold temperatures. When you look at what I didn't mention earlier, reefer rejections continue a pretty steady downward trend. There's just not much reefer volume out there, so even if we have a cold snap here or there, we probably won't see much of an impact on dry van rates out in the Midwest. For carriers that, they hit their peak of their rates over the winter, now they got to start moving their equipment to the more favorable regions down in the southern part of the country.
Yeah, this region seems like it's definitely going to be the one that is going to be the most surprising in the next month. So we'll keep a close eye out on that. But moving over to the Southeast, so this region is seeing some tightening, but it's definitely a mixed bag throughout the markets. What are some of your big call outs for markets to watch in this region, considering we're starting to see an uptick in imports, possibly oranges, if I remember correctly, in imports as well?
Yeah, definitely. I mean, the main 2 markets you really want to watch here are going to be Lakeland, Florida, and Miami. They generally start the trend of upward momentum from the southern tip of Florida going upward. But if you go and you look at lower volume markets in Alabama and Mississippi, we're already seeing a lot of pressure there. I mean, those are lower volume markets. Capacity could just be tight from week to week. But the higher volume markets such as Lakeland, Miami, even Jacksonville will start setting the momentum in the entire Southeast. Again, we got to draw attention to Atlanta, Georgia. Atlanta is the highest volume market in the Southeast. But traditionally speaking, when Florida starts heating up, it starts attracting some capacity from Georgia, which then in return starts heating up Atlanta. So I think we're going to see that take place over the next 60 days. But I think it's going to happen a little bit slower than some others may anticipate. I don't think we're going to start seeing pressure in the state of Georgia until April, but we will likely continue to start seeing Florida tighten up. But again, Florida's sitting at a very low rate per mile to leave the state of Florida right now, so it's not yet that enticing for carriers to send their trucks there, even though rates are on an upward trend, but you can send them somewhere else to get a higher rate per mile right now.
Okay, we're still hearing some gradual increases, which is nice, a nice change of pace. Now, the Northeast is, and I'm so happy about this, is finally starting to see some spring-like weather with temperatures averaging in the 50s and 60s for most markets this week. But can we expect the same kind of heat up for this region and its markets, Maze?
I don't think you're going to see that in the Northeast. I think, if anything, it's going to follow more of a trend of the Midwest. The Northeast saw some pretty large declines over the last week. I think it's going to continue, but I think it is certainly starting to slow down, especially when you look at the highest volume markets, Harrisburg, Allentown, Elizabeth, New Jersey. These markets are definitely seeing the decline slow down, and I think we're start seeing the decline come to an end over the next couple of weeks. But I don't think we're going to see much upward pressure anytime in the month of March at the least.
All right, April seems like the name of the game for the Northeast. But closing out with the coastal region, it's another region that continues to see declines, if I'm not mistaken. But Maze, do you think this is going to be short-lived, or will that be dependent on some of its neighboring markets?
It's definitely going to depend on the neighboring markets. When the Southeast does heat up, it starts pulling that capacity. But it's also going to start following trends in the Northeast. At the end of the day, even in April, not to go back to the Northeast, but the Northeast becomes, if you have freight going into the South and Southeast, just like the Midwest, it's very attractive for carriers. Rates will continue to go down on lanes going to the southern part of the U.S. The coastal region will have the same reaction. I-95 going down to Florida. As the South starts heating up, capacity wants to go there, so it moves there pretty fast until capacity starts shifting too much out of the coastal region and rates start increasing because there's not enough capacity left there.
Okay, so there is quite a lot to watch in the next couple of days, like you mentioned, the next 60, 90 days even, as we start to get into spring. But, I wanted to bring up, there's a new legislation that's gaining some traction. It's called the Modernizing Operations for Vehicles in Emergencies Act, or the MOVE Act. And that was introduced last month as a way to give states more flexibility when it comes to truck weight limits and raise weight limits for all types of freight, which we know can be problematic in terms of getting, relief freight pretty quickly to some regions. Now, most of this would be in emergency situations, but given the situations that have occurred involving weather and wildfires, this could mean faster relief in times of need. So what are your thoughts here, Maze? Is this good for the industry? Is it going to bring some momentum if it gets passed? What are you thinking?
I think it's good for the industry. We saw this during the pandemic where hours of service were lifted in a lot of states.
That's right.
At the end of the day, I think there's a lot of other things that the government also has to be looking for in this industry that we kind of fail to go and open our eyes to that, need an overhaul. But I think this is a good step in the right direction. I think this could greatly help in the time of need. It did in the pandemic, like I said, lifting hours of service during, the supply chain bottlenecks that we got to witness. So I definitely think it's a step in the right direction.
Okay, it only took a couple of years, but progress is progress, so we'll take it. With that, we will keep driving through March and see what the month brings. With that, we will see you next week with an all-new episode of the Transfix Take podcast. And don't forget, as always, drive safely.